G'day there, welcome to the Alpha Wave Trader Week Ahead. I thought today I'd focus on a couple of stocks related to the property market after the announcement late in the week last week with APRA loosening their standards somewhat, and the size of loans that banks can now dish out rising by around 14% apparently. The figure I've seen, but maybe it's higher. But we've seen some auction clearance rates looking pretty good over the weekend, and it really does feel like this might be the linchpin to a bit of a shift in momentum on the property front. And I just thought I'd have a look at a couple of stocks just to give you a sense of something to watch over the next 6 months as a bit of a proxy on the property market, I guess, and as a potential opportunity. Now, with what I'm doing, I can't really give you actual advice or directions on what to do in any stock. This is just for illustrative purposes, so you can get an idea of how I look at things. So we have Genworth Mortgage Insurance here. This is actually a quarterly chart going back to 2015. And look, they've had a bit of a rough trot over that period. I think a lot of this sell-off was based on the loss of a pretty major contract, either CBA or Westpac. Don't quote me on it, but because it's a few years ago now. But that was, I think, one of the main issues for the company there. But other than that, they're very much exposed to the property market, being a mortgage insurer. You can imagine when things are going well, it's a bit of a license to print money, and when things are going badly, they're the first cab off the rank to cop a bit of a pasting. So, when the property market was looking pretty dangerous as we headed towards the election and things were selling off, you can see it's been a pretty rough ride from $3.40 down to around $2. And just interesting to note on the quarterly, and this is where I keep focusing on those buy pivots, we've had this long period of selling off, and we have the lowest price there on the quarterly. So the highest price of that quarter was around that sort of $2.50 region. And you can see last quarter, just finishing the other day, we've got the buy pivot. So that is just looking at the sell-off and looking at the highest price of that lowest price candle, getting a close above it. That's the potential that the market may be turning back up. So from here, it is an interesting company to watch. So that shift in momentum should bring in some buying. It's also had a bit of a false break of the all-time low reached in 2016. So it's been a bit of a double bottom. So there is the potential here for this stock to start riding back up. But the way I look at things, and I can't tell you too much, but from here, now that we've got this quarterly buy pivot, it really is about analysing what happens from here, and that there's probably will be an opportunity to buy the stock at a cheaper price. And I'll just give you the zone, but I won't give you the calculations. This sort of area is where the stock could come back to, shaking out any of these new longs who have been buying over this past 6 months, before finally turning up to really take off to the upside. And it would be, heading and having a quarterly close above that $3 level would really get this trend moving. And the key levels to watch to the upside would be that old high from back in 2017. So that's up around 350, 360, which is a bit away from here. But it's just definitely an interesting little chart, having retested its lows and created the quarterly buy pivot. So that there could be ultimately a good little opportunity. But this is a great reason for using these buy pivots, is that if you get the failure back below the low of that whole structure, it would be looking very sick indeed. So you'd have to run away from the stock. So that's why it's quite a nice setup, because you have a real line in the sand where prices shouldn't get below if the property market really is turning back up and things are looking like they might stabilise for a business such as this. Another good proxy for the market at the moment would be Mortgage Choice. They have definitely been under the pump over the last few years with the property market softening and the Royal Commission and the suggestions for mortgage brokers to lose their long-term payments, trailing commissions. And we can see that this big sell-off from $2.70 down to 75 cents pretty much created a move down into the bottom of the buy zone, really, of the whole wave higher. So if you're looking at this whole wave from 2008 all the way up to 325, really this massive wave of buying, and that has been cleared out. So pretty much everyone who bought this stock from 2008 up to 2013 is sitting on either very little gain in 10 years or big losses. So there's been a big clear out of stock. Now you can see down here the volume really picked up as it headed down to those lows. And now on a monthly basis, we can see we've got a monthly buy pivot out of this zone. So there is the first sign since the sell-off began, really, a couple of years ago, that this thing may be turning around. And it's from a point where you'd expect there to be big support, being the buy zone of that whole wave higher. So we definitely are seeing the first concrete signs of stabilisation in this company. We haven't got the quarterly buy pivot yet, so that would be the next step to be waiting for. But again, like Genworth that I was showing you, it's not the strategy to just buy as soon as that buy pivot is created. I think that is a losing proposition, and often you will get prices thrashing around all over the place after that buy pivot has been created to shake people out. So it's about making calculations based off whatever happens after this buy pivot has been created, and they're calculations that I'll keep for my subscribers basically. But again, it's just another stock to keep your eye on, and there's potential for a bit of a recovery move. And again, good lines in the sand with this area around 60 cents really being a spot that you don't want prices to be heading below because there is a chance of a bit of a panic and prices could really collapse below there. So you've got a good little risk-reward setup, which is going to be interesting to watch going forward. And again, it's all just giving you some ideas that we can follow along over the next sort of 3 to 6 months. So it's not really any recommendations on these stocks at all. All right, well, I will come back with more next week. Cheers.